What's up guys, this is Chris, and over the past few days, MJ stocks have been going crazy. I mean, they're getting pretty dang high, if you know what I mean, in the stock price, of course. And a lot of people have been asking, is this still a good time to get into these stocks, and is there still more and more upside to go? You know, we see the likes of TLRY up like 6 times, 500% over the past month or two. And that's not the only one, right? You have ACB, you have Canopy. So in this video, we're going to discuss why these stocks are going up, what are some pros, and what are some cons and things that people might not be thinking about right now that you really should be considering if you want to be investing into this space. So as I mentioned, these stocks are all lighting up the stock market, and in a really big way. You know, we're seeing moves like 50% a day, 100% a day for some of these companies. And there are three main things going on here. The first one is obviously that this administration is going to be very bullish and very progressive when it comes to this space. So the MJ legalization across the whole country on a federal level is gaining a lot of traction, and most people believe that this is going to be a done deal within the next year or two. So in sometime late 2021 to 2022. My personal opinion, I think that it might not be legalized in this year, as there's obviously a lot going on with the whole pandemic and everything, with the unemployment situation. They probably want to prioritize those things before they really, hammer out all the necessary bills and legalization. With the massive legalization, there's obviously going to be a lot more revenue that these companies can capture. Globally, estimates have this industry somewhere around a 200 billion total addressable market. Obviously, it's not going to happen right away. We're only just talking about the United States here. Globally, in general, MJ is something that is not widely accepted. So, that's kind of a long stretch, a long haul type of number. But here in the United States, at least, the estimates for the next few years is somewhere around $35 to $50 billion in total addressable market, which is really large considering right now the numbers are really small. Even the biggest players in the space in the United States are doing, a couple $100 million in revenue per year. So if any one of these major companies like TLRY can capture a significant market share, something like 10%, for example, that would be $5 billion, which is several times, 10, 20 times what it is right now for them, right? So the upside potential is there. The second major thing that is driving the moves here is going to be that a lot of these companies have a ridiculously high short interest, or well, they used to, right? So this old data from FinBiz shows that TLRY alone had a 40% plus short interest in the stock, and right now it's dropped down to about 20% or so after several major days in the stock price where you see really high volume and tons of people buying. Probably that is a lot of shorts covering their positions. That is, one of the drivers of movement. We saw that with GameStop and AMC. That's definitely something going on here. Okay, and the third big reason why these stocks are moving up is generally, I think that it's not just the retail investor who wants to get into this space, but because of that growth I mentioned earlier, I think that a lot of institutions, hedge funds, wealthy individuals are going to be starting to buy these stocks in droves in anticipation for that huge upside in the future. So one of the stocks that I've talked about on this channel is Futu, right? Futu has been an absolute monster, going from $30 from the time I bought it to here today. It even touched $200 per share. And that is obviously not just the retail investor. When you see the stock going up every single day and gapping up, so opening, just opening up 10% higher from the previous day, 20% higher from the previous day, and it's doing that every single day on really high volume, higher than you've ever seen in the stock before. That pretty much tells you that institutions are loading up the stock, and the way you can really front run this, basically get in ahead of time before those institutional investors, is to recognize that growth and then recognize that this is a stock that has a really low institutional holding percentage. And if you look here today at the institutional holding percentage for Futu Holdings, you're going to see that that number has jumped from like 7% or 17% from the time I first looked at it in August or September, and now it's over 30%. So you can clearly see that institutional buying is what drives the stock price up. Retail investors can only do so much. I think that if more institutions get on board, and with federal legalization, it is going to be more acceptable and more commonplace for those institutional investors to want to invest in this space and have that clarity that this thing, okay, is going to go ahead and go through, and the stock prices are going to grow like weeds. Then that is going to be a big booster to those stock prices, and it's going to allow them to really hold. What we saw in 2017 or 2018, a couple years ago, with the MJ space is that all these stocks shot up like crazy, like what we're seeing here today. Except the thing that ultimately caused them to crash back down is that the legalization and the widespread use of these products was years and years away. And at that time, the administration was not really looking forward and really pushing this agenda ahead. So you're totally seeing a different thing right now. But we'll talk about now the two things I want to make very clear, though, is that even though legalization is probably going to happen in the next year or two, that does not mean that all that revenue and all that revenue converts to income right away. A lot of these companies are going to have to invest heavily, like even more than what they're doing right now. They're going to have to capture that demand, right? So they're going to have to build out a lot more facilities. They're going to have to build out their marketing. They're going to have to get this in front of customers, actually get people to go to stores, actually get people to focus on and actually buy from a particular brand. Some people saying that, especially in Canada, the way they regulate these products and have to put disclaimers and stuff and have to market it in a certain way, it diminishes and only allows so much for brand marketing. And according to some surveys, a lot of people don't even really know what brand of cannabis they're buying, those type of products. So I think that it's going to be hard for any one or two people, companies, to really establish a dominance, right? You have so much competition in this field. I think, like electric vehicles, right? Because this is such a promising market, there's going to be a lot of people, big or small, that are going to try to compete in this space. And I think that there is going to be a lot of jostling for a market share, and that could definitely impact margins and how much income these companies actually make. And when there are investors buying in so heavily in such a short amount of time, I think that this does drive a lot of expectations up. And we've kind of seen this in the past, where a company may have a very promising product or a very promising future, but in the short term can get overheated, and expectations can be so high that people will start to sell off when they just realize things are not going to go as quickly as they think. They don't have patience. Saw that with QuantumScape, for example, ticker symbol QS, has really interesting battery technology, but because that is several years from now, from the time where they'll actually generate significant revenue, right now they're not really generating anything, then the stock price can only maintain so much of its gains. So really the second thing I want to point out and emphasize here is that be very careful and be very selective about how and when you're buying these stocks. Like, I know they're going up 50% a day like TLRY, right? Or, even after hours, these stocks often move 5, 10, 15, 20%. And you're wondering, I don't want to miss out, should I be buying this? But you have to be very careful about FOMO, right? If you're missing out, can cause you to make bad decisions, and I don't want you to blow up your account here. Like we saw with GameStop, like we saw with AMC, right? I know those are totally different types of companies and totally different long-term prospects. If a company has its stock price go up 5-6 times in a short amount of time, then I think you definitely have to exercise some caution here. I don't think this is going to be the only time and the last time that you're going to be able to get into these stocks. I'm not saying don't buy them at all here. You're entitled to do that. But what I would suggest is to layer in. So more than likely, I believe that these stocks are going to have a pullback, right? Logically, what I would do is buy only a portion of what I want in full. For example, if I wanted, let's say I wanted to invest $10,000 into, the MJ space, I might buy 5,000 right now, or I might buy 2,000 right now and wait for a better opportunity. And so with all these pros and cons in mind, I want to now talk about very briefly how you can play this. So there are three main ways to do it. You could invest in a single or a couple of the main producers, the ones that have more market share, the ones that have some results going for it right now already, like a TLRY, for example, like a CGC that has major sponsorships, major partnerships with Constellation brands, for example. The second thing you could do is invest in a company that does the parts or the necessary supply chain types of products for the MJ space, for those producers. And I'm talking about GRWG, that is one of the very legit type of companies in this space. It's done very well even before this huge pop that we've had in this space. Over the past year, that company has been performing very well and actually getting results, and that stock has been going up for some time, even before the past month or so. And that's kind of very similar to my thought process behind investing in MP in the EV space. That's a company that is in the supply chain as well. Very necessary products for, likes of Tesla, for likes of Ford. Everyone's going to use those products. It doesn't matter if this producer wins. It doesn't matter if that producer wins. Everyone's going to use those products. So I think that is a safer way to approach it if I were playing it. And the third thing that you could do is invest in an ETF. And that allows you to really cover all your bases. Again, you don't have to have one person win the game, right? You could invest in a basket of stocks. So MJ, that is the ticker symbol. It is made up of many, many different holdings. And you have some of the major ones there, you have some smaller players there, you kind of get all of them. And if you expect the whole space to do well and grow to that 50 billion total addressable market or even more in the future, and you're bullish about the space in general being legalized, then I think that this is a smart and safe way to play it. As for what I'm personally doing, I probably won't be investing in this space, namely because for personal reasons, my employer does not allow us to invest in MJ stocks or anything that is not fully legalized. This is for you guys that are interested in this space and you're able to invest in this space and you want to know more about this. Hopefully this video gave you a lot of value. Make sure to comment down below if you are going to invest in this space or if you already are and you're making some big gains over the past couple of days. Until next time, my friends, stay well and invest responsibly.